Nigeria's total merchandise trade stood at 9.75 billion naira, representing a 6.99% increase over the value recorded in the fourth quarter of 2020 and 14.13% compared to the first quarter of 2020. The export component of the trade stood at 2.90 billion naira, representing 29.79% of the total trade, while import was valued at 6.85 billion naira, representing 70.21%. The higher level of imports over exports resulted in a trade deficit of 3.94 billion naira. Well, let's discuss this further with Ayodeji Ebo, Head Retail Investment at Chapel Hill, Durham. Thank you very much, Mr. Ebo, for joining us on the program. Good morning.
Good morning. Thanks for
So,
having me.
yeah, the MBS published its Nigeria's first quarter merchandise trade showing that deficit heightened. Can we have your thoughts on this report?
Okay, thanks. Interesting. We saw significant increase in imports, and that just corroborates the pressure we have been seeing on the FX angle. But by and large, looking at the import data, which is about 5.9 trillion. So when you look at it on a net basis, compared to the exports of about 2.9 trillion. So that's responsible for the deficit. And looking at the export segment, if you would discover that there's the OPEC quota that reduced what we can also export, and which is responsible for that lower exports. But when you look at it, juxtapose both numbers, the import and the export, it still shows that we rely more in terms of, for the import, we rely more of importing PMS. And when you also look at the exports, oil export accounts for about 66% of total exports, so which is still very significant. So I believe that what we've seen so far for the import, we also saw maybe some backlogs of import due to the COVID impact that increased. When you look at it on a quarter-on-quarter, on a year-on-year basis, on a quarter-on-quarter was about 13%, and on a year-on-year was, I think, about 34%. So that was responsible for that increase in imports that we saw. But we continue to rely more on oil and oil-related products to boost our imports as well as our exports.
Now, crude oil to total export dropped to 62.1%. What may be responsible for this drop, and can we classify this as progress?
Yeah, for us, I think we won't say it's a progress because, like I mentioned earlier, the quota that was placed by OPEC, when you look at oil production based on the MBS data, increased about 1.7 million barrels per day. We believe that what we saw was, as a result of that quota, would the export would have also increased. But what we should be looking at is, how do we diversify our export earnings? So when you dissect, you look at the data, you look at agricultural products, we still significantly rely on importing a lot of agricultural products, which is very significant. By the time you take out PMS and other oil products, you would still see that significant reliance on importing raw materials for which some of them we can easily produce here in Nigeria. So I think it's for government to see how efforts can be intensified to focus and increase by the time we begin to more focus on, I would say, mechanized farming, so that our yield per hectare, or when we look at it, yield per labor can increase significantly. And that would also help reduce the insecurity in the system by creating more jobs.
Now, China remains Nigeria's top import destination, which reminds us of the Chinese renminbi program by the CBN. What's the current status of the program? Any major achievement?
I would say that based on available information, we've we've really not achieved much within that space. And if you recall, in May 2018, there was that agreement between the People's Bank of China and the CBN for about 950 billion naira currency swap deal, which we feel that when you look at the quantum of even the amounts that was agreed over a 3-year period relative to the trade from import from China accounts for about 30% of total trades within the quarter. And when you also want to analyze that, that's significant. So looking at about 2 trillion per quarter, when you compare that to the amount that is also available. But beyond that, for some of the companies that most of Nigerians import through, for some of them still prefer to receive dollars. And also we've also heard that in terms of the processes, maybe the CBN may also need to review that to see how that can how the process can also improve. So because if we're able to achieve more demand for the renminbis, or what we call the Chinese yuan, that may also reduce the demand for the greenback, which for the dollar. So I will believe that nothing much has been achieved. Yes, it's a very laudable initiative when we look at our import dependent, our partner, which is China, greatest partner in import, which is China. That would also help reduce pressure on the dollar.
Now, we have noticed the continued depreciation of the naira at the parallel market. What's your expectation of this week, and what can be done to reverse this trend?
Okay, just a bit of background. Within the last 2 weeks, we saw that the CBN changed. So the reference FX rate from 379, which is the CBN rate, to the NAFEX rate, to which is currently about close, I think, around 410 naira to a dollar on Friday. So that fueled a lot of speculations because when you look at the adjustments based on the official rates, it's like a technical adjustment or a technical devaluation of the naira. So as a result of that, we saw that significant demand at the unofficial market. And for most investors, or for most Nigerians, when you also look at that vis-a-vis the high inflation rates, investors or Nigerians will see that they may be losing value in dollar terms. And so there's been a lot of speculation also in terms of the demand for dollar has increased significantly, and most Nigerians wants to hold at least a part of their portfolio in dollars, so to hedge against any potential devaluation or depreciation of the naira.
So how can investors hedge their investment against this naira devaluation, or call it depreciation?
Yes, I think coincidentally, I think today marks we're launching our dollar mutual fund today. And the essence is to provide a dollar opportunity for a dollar investment opportunity for investors, minimum entry of about $1,000, which provides, when you look at it compared to purchasing Eurobond of about $200,000 minimum standard. So I believe that when you check the trend in terms of the trend in the movement of the naira, it's also makes it's rational for investors to also consider dollar-denominated assets as part of their investments to diversify and also to hedge. So we believe that dollar mutual fund, especially like what Chapel Hill we have just launched, we provide you the opportunity to build up your dollar portfolio gradually over time, and also to earn significant interest rates rather than leaving funds in your dorm accounts.
Now, this dollar fund, okay, what I want to, if, for instance, I put my money into the dollar fund and then I want to get it back, am I going to get it back in dollar as well?
Yes, definitely. You are investing in dollars and you'll be receiving it in dollars with the interest. And for what is unique about the Chapel Hill mutual fund is that there will be quarterly returns that will be paid in dollars. So it means that if you are looking for cash flow in dollars, if you invest in it on a quarterly basis, you would also receive these returns in dollars. And any adjustments to the naira, when you look at it, there are also two types of gains. Any adjustment in the naira leads to gain. Then also we have a target return of about 7 to 8% return on the fund, which will also be professionally managed.
Okay, let's do a quick dash into the fixed income market for this week. What's your expectation?
Yes, this week we know the NCB auction will be holding on Wednesday. About 91 billion will be on offer. We've also seen the third quarter fund auction calendar, which also shows that the amount on offer also remains same. So we believe that what we've been seeing, we saw mild reduction in yields last week. We saw that renewed interest, though still very mild in terms of buying interest. We believe that would also continue because we feel that except we see any major tweak to the OMO rate, we believe that rates may settle around these current levels. Yes, inflation rate may still remain very high, but we know the CBN has always used the OMO instrument as a way to guide interest rates. So we believe that most expectation before was that we'll be seeing close to 15% level, but average yields have reduced last week, and we expect that if there's no major change to the OMO rate or for any major policy from the CBN regarding that, we expect that rates may reduce further, as we even expect more maturity in the coming months.
Okay, and a quick one. What's your expectation for the equities market this week?
Yeah, we expect that the equity market will remain soft because when you look at the high yield environment, so for investors are also a bit skeptical. And also when you look at for the institutional investors or even the PFAs that play significantly in stocks, when you look at placement rates with the banks now, it's at is around double digit rate. So there's really no incentive for the major drivers of the market to invest. And the foreign investors, aside in reinvesting their dividend, we're not seeing any major interest for them. So we still believe our outlook in the short term for the equities market still remain very, very bleak, and would only just recommend for long-term investors, and they should just select stocks that have strong fundamentals. We know from next month would see some companies that will also declare interim dividend, and that will may boost investors' sentiment, especially for domestic and retail investors.
All right, thank you very much, Mr. Ayodeji, for your time this morning.
Thanks for having me. Always my pleasure.